Hello mga ka-Money-wise! Welcome back to my channel. In this video, meron akong i-review na dalawang stocks in my signature dividend portfolio, ang LTG at PLDT. Available na ang kanilang financial statements sa MSN Money, so it's the perfect time for me to review if they still meet my investment criteria. Are they still worth holding? Let's find out. So here's my signature dividend portfolio sa Dragonfly Securities. Both LTG and TEL are among my top 10 holdings in my dividend portfolio, with LTG being my second largest holding and TEL naman yung fifth largest holding ko in terms of market value. Before we dive into my stock review, I want to share the investment strategy na ginagamit ko, especially for those who are new to my channel. I use the PEACE framework, which I learned from Value Investing College. And ito ang 5 key metrics that I use when deciding whether to invest in a company. P is for profitability. Sa profitability, I use earnings per share. A positive and growing EPS means the company is profitable and increasing its earnings over time, which is a good sign for investors. I is for inflow of cash. I look at the operating cash flow. Ang target ko dito is consistently positive. A positive operating cash flow is important because it reflects the actual cash generated from its core business operations. If a company reports positive earnings pero negative ang operating cash flow, it may indicate potential financial trouble. E is for efficiency. Sa efficiency, I look at return on equity, which measures how efficiently a company generates profits from its shareholders' equity. A higher ROE indicates strong management and better profitability. C is for conservative debt. So dito, tinitignan ko naman ang debt to equity ratio. A lower DE ratio indicates financial stability and less reliance on borrowing, which reduces risk for investors. Yung pangalawang E is for economic moat. This evaluates whether a company has a durable competitive advantage. A wide moat helps ensure long-term profitability and stability of the company. In addition to the 5 key piece metrics that I mentioned, tinitignan ko rin ang return on invested capital. High ROIC stocks tend to sustain higher long-term growth. Target ko sa ROIC ay 10% and above, 8% at the minimum. Let's start. Start tayo with PLDT. Ang ticker code ay TEL. PLDT is a leading telecommunications and digital services provider in the Philippines. It offers a wide range of services, including fixed line services, wireless services, digital services, and ICT solutions. In terms of revenue, PLDT has demonstrated steady growth over the past 8 years with a compound annual growth rate of 3.5%. Ang net earnings also showed consistent growth with a compound annual growth rate of 6.2%. Tumaas din ang profit margin ng PLDT noong 2024, nasa 14.9% ang net profit margin. Tumaas ang total revenue from 210.95 billion pesos in 2023 to 216.83 billion pesos in 2024. This represents a growth of 2.8% in total revenue. Ang wireless services contributed 48.4% of PLDT's total revenue. Total wireless revenue grew by 2.3% in 2024, mainly driven by higher mobile service revenues. Bumaba ang home broadband, handset, and modem sales, but the growth in mobile services offset the losses. Ang fixed line services naman contributed 51.6% of PLDT's total revenue. Revenue increased by 4.34% noong 2024, driven by data and voice services. On profitability, PLDT's EPS grew over the past 8 years at a compound annual growth rate of 6.2%. Bumaba ang EPS in 2022 due to higher expenses and economic challenges. Pero naka-recover naman agad noong 2023 and it reached a record EPS of 149.26 pesos in 2024. Sa inflow of cash, PLDT's operating cash flow remains consistently positive. This shows that PLDT is consistently generating sufficient cash from its core business operations. Pasado sa inflow of cash. Sa efficiency, ROE has remained consistently high except for a sharp drop in 2022 due to lower profitability. Pero naka-recover naman agad in 2023 and it reached 28.21% in 2024. PLDT has a high debt-to-equity ratio at 2.09 or 209% due to its capital-intensive nature. Common ito for telecom companies since they require heavy investments in infrastructure, network expansion, and technology upgrades. PLDT aims to lower its 2025 capital expenditures and it's also working to reduce its debt. Ang forecasted DE ratio for 2025 is 1.8. Despite this leverage, PLDT maintains a strong interest coverage ratio of 4 times, indicating it generates sufficient earnings to cover interest expenses and remain financially stable. To assess PLDT's economic moat, evaluate natin using the 5 types of moat. Start tayo with PLDT's strong moats. The network effect is a powerful competitive advantage sa telecom industry kasi habang dumarami ang users, tumataas ang value ng network. And PLDT benefits from a strong network effect, lalo na sa kanyang fiber and mobile services. Dumami ang fiber and mobile subscribers ng PLDT compared to the previous year. Pangalawa, efficient scale. The telecom industry requires heavy capital investment. And the high cost of building and maintaining PLDT's infrastructure, gaya ng fiber networks, cell towers, and data centers, makes it difficult for new players to enter the market. Next is cost advantage. PLDT's extensive infrastructure gives it a cost advantage. It allows the company to spread cost over a broad customer base, leading to competitive pricing. Another one is switching cost. The inconvenience, potential downtime, and cost of switching create a barrier. Halimbawa, mga businesses will face challenges in switching providers due to long-term contracts, installation cost, and potential service disruptions. Para sa akin, moderate moat naman ang intangible assets. While PLDT enjoys strong brand recognition, meron na siyang competition na established brands na rin, Globe and Converge. Despite competition from Globe and Converge, PLDT remains a dominant force in the industry. However, rising competition demands ongoing innovation and strategic initiatives para masustain ng PLDT ang kanyang market leadership. Sa moat analysis, para sa akin, PLDT has multiple strong moats. So, I'm giving it a score of 5. Mataas ang ROIC ng PLDT, except lang noong 2022 due to the pandemic. A high ROIC indicates a strong competitive advantage and good capital management, making the business more sustainable in the long run. Ang trailing 12 months dividend yield ng PLDT ay 6.99% and semi-annual ang dividend payout every March and September. PLDT has shown a gradual increase in dividends over time and nagbigay ng special dividends noong September 2022 and April 2023 kaya merong spike sa dividend chart. Over the past 5 years, ang annual dividend ng PLDT ay nag-grow at a compound annual growth rate of 5.92%. Dividend payout ratio from its earnings ay 65%. I have updated my intrinsic value based on the latest earnings report. Ang intrinsic value is 2,054.62 pesos at ang buy below price ko with 30% margin of safety ay 1,438 pesos. PLDT continues to expand its services to provide better connectivity to homes across the country. PLDT also launched a high-speed fiber internet plans that deliver speeds of up to 10 Gbps. This provides significantly faster internet for households. PLDT also introduced a new service called Always On Broadband noong November 2024. This combines yung kanyang fiber network with Smart's wireless network to ensure continuous internet access. PLDT is also working to make digital services available to people from all income levels. Next is LT Group Incorporated. Ang ticker code is LTG. LTG is a diversified conglomerate with businesses in banking, liquor, tobacco, real estate, and beverages. LTG's revenue grew by 12% to 129 billion pesos in 2024, up from 115 billion pesos in 2023, mainly driven by growth in banking and distilled spirits. Nag-grow ang revenue ng LTG over the past 8 years with a compound annual growth rate of 10.6%. And tumaas din ang net profit, showing consistent earnings growth. This indicates strong financial performance ng LTG. Nag-more than double ang revenue and earnings since 2016. Mataas at growing din ang profit margin ng LTG. Ang 2024 net profit margin is 22.4, which is higher versus the previous year. Banking is the largest revenue driver, contributing 57.9% of total sales, followed by distilled spirits at 26.1%. And beverage naman at 14%. Mababa lang ang contribution ng property at 1.9%. Tobacco is not included in the revenue breakdown kasi LTG does not sell tobacco products directly. Yung profits ng LTG come from an investment. So it shows up as earnings but not sales revenue. Ito naman ang net earnings breakdown, which includes tobacco earnings. Banking is the largest contributor at 44%, maintaining strong growth at 11% year-on-year. This is supported by higher net interest income ng PNB. Tobacco earnings naman increased by 12% in 2024, driven by higher dividends and forex gains. Pero ang kanyang total share in earnings declined from 33% to 26%. Nag-decline ang cigarette volume due to affordability issues, illicit trade, and the shift to vaping. Distilled spirits and beverage grew significantly, and property development is the only segment that declined in 2024. Pero maliit lang naman kasi ang contribution ng property sa revenue ng LTG. Sa profitability, LTG's EPS is up by 13.2% in 2024 versus 2023. And nag-grow ang EPS ng LTG over the past 8 years at a compound annual growth rate of 17.2%, showing strong earnings growth ng LTG. Nag-decline ang EPS noong 2022 and 2021 due to the pandemic, pero naka-recover naman agad in 2022. Sa inflow of cash, LTG has maintained positive operating cash flow over the past 8 years. And nag-drop ang operating cash flow noong 2021 and 2022 due to the pandemic. But it quickly recovered naman noong 2023. And consistently positive siya. Sa efficiency, LTG's return on equity improved from 9.83% in 2017 to 16.66% in 2024. Bumaba noong 2020 at 2021 pero consistently above 15% na siya from 2022 to 2024, indicating stronger profitability and efficient use of shareholder equity. Healthy ang balance sheet ng LTG. Mababa ang kanyang DE ratio at 13.3%, indicating low financial risk and strong financial stability. Now, evaluate naman natin ang economic moat ng LTG. Mag-start tayo sa kanyang strong moats. Unang-una, cost advantage. LTG benefits from economies of scale, particularly sa distilled spirits and beverages, allowing it to sell at competitive prices while maintaining strong margins. Pangalawa, intangible assets. LTG owns well-established brands like PNB, Tanduay, Absolute, Summit, and Cobra Energy Drink, which have strong consumer recognition and loyalty. Government regulations sa banking industry and liquor industry also limit new competitors, further strengthening its market position. Next is efficient scale. High capital and regulatory requirements in banking and alcoholic drinks industries create strong barriers to entry, limiting competition. So napag-usapan naman natin ang moderate mode ng LTG. Para sa akin, moderate ang switching cost. Customers in banking, specifically sa PNB loans and accounts, are less likely to switch, creating consumer stickiness. Pero sa beverages and alcoholic drinks, consumers can easily switch to other brands or try different brands. PNB benefits from its growing customer base, pero yung LTG's consumer products business does not rely on a network-driven model. Sa moat analysis, para sa akin, LTG has multiple strong moats. So, I am giving it a score of 5. Tumaas ang ROIC ng LTG noong 2024 at 11.19%. This shows that LTG is generating stronger returns on its invested capital. If LTG can sustain this level of ROIC, this will strengthen LTG's competitive position and drive future growth. So now, let's check naman ang dividend payments history ng LTG. Ang trailing 12-month dividend yield ay 10.1%. And LTG follows a quarterly dividend payment schedule. May mga spikes sa dividends due to higher special dividends nung time na yan. And yung most recent payment in December 2024 showed a slight increase to 0.35 pesos per share. LTG's cash dividends per share have grown from 0.81 in 2020 to 1.25 in 2024 at a compound annual growth rate of 11%. Mababa ang dividend payout ratio ng LTG at 6%. So, LTG's dividend payments are well covered by its earnings. With its low payout ratio of 6%, LTG has the flexibility for business expansion or other investments. Updated na rin ang intrinsic value ko ng LTG based on the latest earnings report. Ang intrinsic value is 15.74 pesos per share at ang aking buy below price ay 11 pesos. Both PLDT and LTG have continued to deliver strong performance. With their solid fundamentals and growth potential, confident pa rin ako sa dalawang stocks na ito. So, hold pa rin ako ng PLDT and LTG for the long term. Pag gusto mo mag-invest sa dividend stocks at wala ka pang account, sign up on Dragonfly Securities using my referral code MoneyWise.